All right, chapter 2 in commission rules and regulations. In this chapter, we're going to identify standards set by licensing law and the commission, the real estate commission's rules regarding brokerage business. We're going to explain commission regulations for the broker business, relationships, and advertising. We're going to describe violations and penalties of the licensing law as well. A lot of information in this chapter, big chapter. So let's not hesitate to move forward. So here's obviously the screenshot where you would do these highlights. And I just have it written up here, the same stuff in my own words. Salesperson may not accept any form of compensation except from their supervising broker. We learned that in the last chapter too. You see how some of this stuff overlaps a little bit? You can't maintain an escrow account or hold funds belonging to others, or work for more than one New Jersey broker at a time. We kind of covered all that stuff in the last chapter, but I guess this chapter, we're doing it again. Okay. Everybody got the highlights? We good? All right. So when it comes to your place of business, there's no virtual brokerages in New Jersey. Every broker who's a broker of record has to have a physical place of business. No virtual offices allowed here in New Jersey. So the broker can have an office in their own house. Now, hold the phone. You can't just start a business and run it out of your house. You can't start in a residential neighborhood, start a commercial business, right? So, of course, the broker needs to have if the broker has a house that's in an area that's zoned for mixed use, residential and commercial, in that instance, they could have their brokerage out of their house. However, it must have a separate entrance visible from the street, and it has to have a sign with the broker's name and the words licensed real estate broker on it. The office must never be in the home of any of the broker's associates. Broker salespeople, referral agents. The purpose of this is to prevent an illegal practice known as license lending. It's like I told you guys, I started my real estate brokerage before I had my own broker's license. I hired a broker. Okay. I can't tell you how common it is. When I was interviewing brokers, I was trying to find a good broker for my brokerage. I can't tell you how many people offered up their license that said, hey, listen, I know what you want to do. You want to start a brokerage and do your own thing. I won't bother you. I won't be in your face. You need to put my license name down there. Listen, you're going to pay me this, and I'll get a percentage of the broker's cut, the income to the brokerage, but I'm not going to really be there. If you got a question, I guess you could call me, but otherwise, I'm not going to be here at all. That's license lending. That's illegal because when you're a broker of record, when you're a supervising licensee, when do you need to be in the office? You need to be full-time, physically present in the office at least 5 days a week during normal business hours and not have another job, right? Trying to prevent that license lending. I'm surprised how many people who got broker's licenses and aren't doing anything with them are like, yeah, you could borrow my license to open your own brokerage, and you got a problem or the real estate commission comes in, or you could call me, but other than that, you're just going to pay me. Illegal. No thanks. There's the door. Bye-bye. Okay, so office management requires a broker or broker salesperson's license to manage an office. You cannot have a salesperson, a referral agent, or God forbid, a person without any license whatsoever even to be managing a real estate office. Okay, you got to have a supervising licensee in place. And that could be someone with a broker type license, either a broker of record or a broker salesperson who's registered with the Real Estate Commission as the office manager. So let's do those highlights. Page 16. Talks about the office having a separate area with its own entrance visible from the street. The sign with the broker's words, the broker's name and the words licensed real estate broker. What full-time is for the supervising licensee. And who can manage a branch office? You gotta let me know when you guys are done. I don't know how quick you write and highlight.
Ready.
You all good?
Yeah.
Right. So every brokerage office must have a copy of every licensee's license available for public inspection. So all the agents that are working within that brokerage firm, the broker needs to have their, you got your pocket card license, the one that you got to carry with you. There's also the larger license that the broker needs to have either displayed on the wall, or they could uh, they could put it in a binder and have that binder on the front desk or behind the front desk available for public inspection, that has a copy of everybody's license that works out of that office. If it's the main office, the main office not only needs a copy of every license that for the licensees that are working out of that office, but also from the branch offices as well. That's all that says. All right. Your broker will have two bank accounts. They got their operating account, and they have an escrow, or often referred to as a trust account. The escrow or trust account, it's the same thing. It's a bank account where we keep other people's money in, and only other people's money. So right next to it up there, that the broker cannot keep the interest if it's an interest-bearing account. Can't be making a secret profit off your client's money. If it's an interest-bearing bank account, your client's got to get paid the interest on their money that's sitting in the account. Now, your brokers are the ones that manage these escrow accounts, but we still need to know how they work. The bank account needs to be clearly labeled as a trust or escrow account, so that in the event of a bankruptcy, divorce, or death, nobody can claim the money that's in that bank account, because it's clearly an escrow or trust account that indicates that that's other people's money. It's not the brokers. They've been holding it. They've been safeguarding it for others. Now, it says brokers are required to deposit funds coming into their keeping promptly, which the commission defines as within 5 business days of acceptance. So salespeople should immediately give any escrow monies they've received to their broker. So you got a client, they're a buyer or renter, they're putting down a deposit, right? What do you do with that money?
Give it to your broker.
Immediately. I know it says within 5 business days of acceptance. 5 business days of acceptance. We're not talking about the offer being accepted. We're talking about within 5 days of you accepting that money from your client. You don't hold on to it to wait to see if the offer is accepted first. Your clients give you money, including checks. You immediately give it to your broker, because your broker has to do some record keeping. They got to make some notations in their escrow book that keeps track of who gave us this money and what is this money for? Who's the agent that's working with this client? And are they purchasing? Are they leasing? For what property? So your broker needs to maintain an escrow book that has all this information in there. And then they need to keep copies of those deposit slips, copies of the checks and everything, all the original stuff. Okay. They need to keep, they can't just scan it and throw the paperwork away. They need to keep all the original paperwork. Okay. So you get a check or money from your clients, you immediately give it to your broker. Your broker has 5 days from the time you accepted that money to do their escrow records and then deposit that money in the bank account. Otherwise, you guys can get in trouble. You and your broker can get in trouble for that. So you need to give that money immediately to the broker, and your broker has how long to deposit it in the escrow account?
5 days.
You think it's going to be on exam?
I do.
Oh, add it to your notes for sure. Quickest way to lose your license: F around with other people's money. Number one reason why attorneys lose their licenses, number one reason why real estate brokers lose their licenses: screwing around with other people's money, mishandling funds and property. So brokers are specifically prohibited from commingling. That's another term you need to know. That's mixing their own money in the escrow account with their client's money. That's a big no-no. Anybody know what it's called, even though it doesn't say it here? It says it like in a much, much later chapter. What it's called when the broker spends their client's money? They actually have an official word for it, other than thieving. Conversion. When the broker spends their client's money, it's called conversion. You're converting their money to yours when you spend it. Yeah, put a lot of thought into that one, right? You're not going to get conversion on the exam, so don't worry about it. But commingling, you'll need to understand. You need to know the time frame. You give the money immediately to the broker. Broker has 5 days to put it in the escrow account. 5 business days, that is. I'm not going to get into what a business day is at this time, but we'll get into that later because there's 2 definitions for a business day. All right. Now, in some circumstances, the broker may be authorized to collect a commission directly from money that's held in the escrow account. That usually happens when we're dealing with a landlord, right? And they list their property for rent with us. They hire us to find a tenant. So when we find them a tenant who wants to rent from them, the tenant gives us first month's rent and a security deposit. Let's just say it's a month and a half security, right? Do we give that money immediately over to the landlord? No, because they're not moving in there yet. They sign a lease contract that says that the lease starts on a certain day, and the tenant's not allowed to move in before that day. They're not given the keys to the apartment before that day, so therefore the landlord's not given the money before that day. So we're holding on to it. The brokers are holding on to it in the escrow account. Now we got to get city inspections done to make sure there's fire detectors and extinguishers and all that stuff is working, you know. And once we get that all done, and the date comes about for the start of the lease, we give the keys to the tenant and we give the money to the landlord. Now, the landlord may say to us, wait a minute, let's just say I'm charging the landlord 1 month's rent as commission. The landlord says, hey, listen, instead of you writing me out a check for 2.5 months rent, you know, and then I got to write you back a check for the 1 month's rent as your commission, why don't you just write me out a check for the security deposit, the month and a half, and you keep that first month's rent that you already have in your bank account as the commission. So we're not writing checks back and forth to each other. Okay, if that's the case, in some circumstances, the broker may be authorized to collect a commission directly from money held in the escrow account. That money's already in our escrow account. In that case, the business ledger should document the source and authorization and the amount of the source of the commission. The money should be taken promptly after the authorization out of the escrow account, because if it's left there for more than 5 business days, it's commingling because that money's ours now, but it's already in the escrow account. But as of that day where they said you could keep that as your commission, it just became our money. So now we start counting the days. So the broker should take that money out promptly. No longer than 5 days, leave it in there. Otherwise, we could be accused of commingling. And then we get fines from the real estate commission for that. Because we're not allowed to keep any of our own money in the escrow account. Although the next sentence says, the broker is, however, allowed to keep a nominal amount, small amount, of their own money in the account to cover service charges if they're required to keep the account. You know, banks these days, they charge you to have bank accounts, especially business accounts. So the broker is allowed to keep a small nominal amount of their own money in the escrow account to cover those charges, so it doesn't come out of the client's deposits money that's in the escrow account. Now, some brokers may get the idea, you know what, I'm going to throw $10,000 in there and I don't have to worry about it for the next 50 years. All right. No, you can't do that. Small amount of your own money the broker can put in there. Everybody got these notes? Great. So here we go. Here's a list of all that rules and more pertaining to escrow accounts. So, like I said, the broker has 2 bank accounts, an operating account used to pay the brokerage bills and the agent's commissions, etc., and an escrow or trust account, which is used to temporarily hold on to our client's money. So, broker cannot keep any interest earned if it is an interest-bearing account. We cannot make a secret profit off our client's money. That's unethical to do so. The account must be clearly labeled as an escrow or trust account in the bank's records. Licensees must give any deposit money to their broker immediately. So your broker then can deposit it within 5 business days of receipt. Receipt from the time the money is given to the agent, not from the time the offer gets accepted. I got a little link here to the Real Estate Commission's website. I'm not going to go there. They talk about a problem with agents not immediately turning over the monies. They're waiting for the offer to get accepted first, and you can't do that. To safeguard our clients' money, we need to immediately give it to our brokers, who then put it in a bank account. Brokers must keep all records accounting for all funds, deposits, and withdrawals in a escrow book, which must be updated at least every quarter, every 3 months. Brokers must keep bank deposit slips and escrow records for 6 years. Commingling is prohibited. That's mixing the broker's funds with the client's. Oh, by the way, 6 years. Let's not overshadow that. You need to know that for exams. Brokers are required to keep all records. All the records. Commissions paid to their agents. Contracts that were written. Listing agreements. Bank records, everything, the original documents, not digitized versions, the original documents for 6 years. There's only one exception to that. Expired listings, basically expired listings that never had offers accepted on them, they only need to keep those for 6 months. As what 2 exceptions, expired listings and unaccepted offers. So we had a written offer that was made, but it was not accepted. It was rejected. We still need to keep it, but for 6 months. Okay. So brokers keep all records for 6 years, except for 2 things: expired listings and unaccepted offers, which they keep for 6 months. Darn Skippy, that's going to be on exams. So you need to know about record keeping.
Quick question.
Shoot.
So the agent, do they need to keep the expired offers or is it just the brokerage?
Well, the brokerage, the agent will, what are you going to do with it? Keep it in your house, So yeah, you give it to the broker. The broker keeps it in their records. They keep it in their filing cabinets. Eventually, they shuffle all the old records, the expired, unaccepted offers, all that stuff. They'll put it in a box and they'll put it in storage. They need to keep it for those for 6 months. They need to keep all the other records for 6 years.
Okay.
So commingling is prohibited. So that's mixing your broker's money with the bank account with the client's money. Written receipts are required for cash deposits. Although you're allowed to accept cash deposits, my advice to you is don't. What happens if somebody clobbers you over the head and robs you? You're responsible for that money, right? Drama, right? What if somebody gave you a bunch of cash and there was a couple counterfeit bills in there? You go to you give it to your broker deposits it. The bank is going to keep it. They're not going to give you credit for it, and they're not going to replace it with good bills either, right? So what's going to happen with that? Drama. What's drama good for? You guys like drama in your personal lives? I hope not. You like drama in your business life? Hell no. You don't want it in your personal life? Why the hell would you want it in your work life, right? So what is drama good for? Come on, you all know the answer to this one.
Entertainment.
TV, that's it, right? We love living off of other people's misery and problems, right? So TV, that's all that drama's good for. We don't want it in our personal lives, and we certainly don't want it in our business lives. So avoid the drama. Don't accept cash. That's my advice. Are you allowed to, though? Yes. But it brings the drama about, and I'm going to show you why in an upcoming slide. There's even more drama to it than you think. Funds already in the escrow account that become the broker's commission must be removed within 5 business days, or that could be considered commingling. See how my notes are a little bit more explanatory than just the simple highlights that we did on the previous pages? That's why I like to have them out there for you. You must provide accounting for any advance fees that your clients give you of $25 or more. For example, if these advance fees help with marketing costs. Now, your typical home seller is not going to be giving us money to help market their house for sale, right? It's hard enough to get the commission out of them promised to us if we sell the house and find a ready, willing, and able buyer. So getting them to pay money in advance, what are they talking about here? Well, builder. A builder may have a fund set up for advertising, and they share some of that money with us because they want us to maybe put up a billboard or do some certain kinds of marketing or advertising in a newspaper or magazine. If that's the case, we need to give them accounting of how that money is being used within 90 days of those funds being put into the escrow account. So they need to be put into the escrow account, number one, if they give us more than $25 or more. And then we need to give them accounting within 90 days of how those funds are being utilized, if they're giving it to us to utilize it for something like that. Now, cash deposits or withdrawals. Here's that drama about accepting cash. We're allowed to accept cash, but if clients give you $10,000 or more, you need to report it to the IRS. And how many people, with a show of your hands here, love communicating with the IRS? That's what I thought. Okay. And whenever you communicate with the IRS, it needs to be on a special form, right? I couldn't even tell you what that form number is. You know why? This guy don't accept cash. And here's some more reasons. Okay, so even though we're allowed to accept cash, do not mix my advice with what you're allowed to do, okay? If you get robbed, you're responsible for the money. If they give you counterfeit cash, you may get a visit from the Secret Service too. You need to report it to the IRS on specific forms. No thanks. And so it's highly suggested to get a certified check or bank manager's check instead. I don't even suggest that you take personal checks, because sometimes people forget to shuffle the money from their savings account to their checking account. And sometimes they bounce checks for legitimate reasons. They have the money, but they're shuffling the funds around and these checks get bounced. And if that happens, we have what we call, we need to treat everybody fairly and honestly in a real estate transaction. So if a check bounces, we have to let the other parties in the transaction on the other side, the seller, we need to let them know, hey, that deposit money we told you we had from the buyers when we asked you to accept this offer, well, we don't have it because the check bounced. What do you think that's going to do to the transaction? Drama, right? So because of that, I don't even like accepting personal checks. I always tell people certified check or a bank manager's check. Okay. That's what I don't even want I don't even want, what do you call them? Money orders. Because that's even more drama. Money orders, sometimes a store can sell you a money order. And that money order has already been used. It's been washed, what they call it, and it's being reused. And when it gets to the money order company and they do their accounting, they realize that when they look at the serial number that this money order has already been reused. So that could be months later. Now they're going to the bank account that they paid those funds out to, and they're pulling it out. And that's in the escrow account. That client is long gone. Now they're taking out someone else's money. Drama, drama, drama. So I don't even accept money orders from people. Okay. Yeah, I know. Don't accept cash. Don't accept personal checks. Don't accept money orders. That's me. Okay. Because I've dealt with all the drama before and I don't want to deal with it no more. Okay. Your broker may have another policy. They may be willing to accept all the above. Me personally, I don't because of those reasons. You should follow your broker's policies, but also a little bit of my advice. But understand you're allowed to accept all of these things. Okay. Now, when somebody's buying all cash, some of these people try to play off like they're players, Oh, you don't got to worry about cash. Cash ain't no thing. I don't care if you're Donald Trump, cash is a problem. He's bankruptcy 3 times in his life, right? I don't care. Rich people just have bigger money problems, okay? But so you should get a proof of funds letter. I don't need to know how much money that you have. I just need to know that you have enough to complete this transaction. So there's actually something called a proof of funds letter that you could get from the bank manager. So you ask your buyer client to get a proof of funds letter to support however much the purchase price is. I need to know you have at least that much money in your bank account. I don't need to know how much money you have. I need to know you have enough. So I need a proof of funds letter from you for this amount from your bank. It's a standard form letter that your bank manager has. And the bank manager actually goes into the account, looks it up, they fill in the numbers, and then they sign it, and they have a raised seal stamp that they put on it, and they sign it. And that's the proof of funds letter from the bank manager. So when somebody's saying they're buying cash, oh, you don't got to worry about cash. Cash ain't no thing. Cash is always the thing. And I don't even know you, so it'd be different if I had an actual celebrity or someone else walking in the front door. But you know what? Even with them, I'd want a proof of funds letter. I'm not putting my license of my life on the line, my license over how much money you got in the bank account because you're acting like your S don't stink and that you got all the money in the world. All right, so here we go. Let's do some highlights here. Advance fees, $25 or more, must be placed in escrow. Broker must, okay, this is all the stuff we already went over. We're just doing the highlights now in the book on page 17. This is from page 17. Everybody got it? You are some quick note takers. If anybody doesn't, just make sure you tell me to stop. I don't want to be rushing anybody through. All right, and like I just told you, once again, every broker must keep all records for at least 6 years. Cross out of trust account activity. This section is talking about trust accounts. That's why they wrote trust account activity. but I'm going to make this a permanent note for you to study in your book. So cross out of trust account activity and just keep, every broker must keep all records for at least 6 years, except expired listings and unaccepted offers. They must be kept for 6 months. And then you could temporarily go to the next page on page 18 and put a highlighted box around other documents, which basically talks about all other records, you know. This one sentence that I had you write up here, or 2 sentences, that covers everything you need to know about record keeping. Everything for 6 years except for 2 items, expired listings and unaccepted offers. But under other documents on the next page, well, brokers need to keep copies of non-financial, non-permanent records, which did not lead to transactions, like unaccepted offers to purchase for 6 months from the date of initial offer. All copies of contracts of sale and listing agreements must be kept for 6 years. Also, bills for brokerage services, records showing payments to salespeople and cooperating brokers, bank statements, canceled checks, and deposit slips from the broker's business escrow account must be kept for 6 years. Everything is 6 years, except for 2 things: expired listings and unaccepted offers. And even though you work hard and you get your own clients, you're not going to just rely on your broker spoon feeding you business, right? You're going to work on getting your own buyers and sellers, right? Right? Because we're going to be productive go-getter agents to make as much money as possible. We're not going to rely on somebody else and then be complaining when we're begging for cash because we barely got enough to make our cell phone bill payment. Okay, so we're going to go out there. We're going to be getting our own business, and we're going to be making mad money. That's what you've got to do. You got to be proactive in this business, right? So you got to remember, those clients that you went out and you got, they're not your clients. They're your brokers. As long as you're working for that brokerage firm, listen, you cannot, only the broker can charge the public service fees for services performed. So any of those clients that you go out there and you get, they're actually clients for your broker. Your broker hires you to help them service those clients. And in exchange, they split their commission with you according to your independent contractor employment agreement with them. Got it? That's the way that it works. So when you leave that brokerage firm, if you quit, if you get fired, or whatever the reason is for you leaving that brokerage firm, you cannot remove any of the records or documents from that brokerage. They belong to the broker. If you do so, your broker reports you. You get in trouble with the real estate commission. Simple as that. And if you take those clients somewhere else, you get them to cancel the listing, and so you could transfer it to where you're at somewhere else. Don't be surprised if you don't get sued by that broker too. So, highlight, salespeople may not remove anything from the broker's files if they leave that broker. And once again, another slide with the record keeping. We keep everything for 6 years, except for 2 things: unaccepted offers and expired listings, which are kept for 6 months. And all those records, contracts, listing agreements belong to the brokerage. Salespeople may not remove them when they leave that brokerage firm. These agents got in trouble because they did. Well, what else did they do? This person failed to supervise their salesperson under their employment. So this is a broker. She got in trouble because their agent did something wrong. She got a $2,000 fine. And this is her agent. Meet her agent here. What did he do? He failed to deposit the buyer's deposit check within 5 business days into the escrow account. $2,500 fine. And the broker got $2,000 fine for the same thing because the broker was supposed to supervise them. Okay, what happened here? This guy, what did he do? He failed to immediately turn over the escrow monies to their broker to deposit it in the trust account. So he agreed to complete 3 hours of CE in the areas of agency that will not count towards his mandatory hours and got a $1,500 fine. Don't mess around with other people's money. All right, we're going to stop right here because we're at the end of the class. So we're going to leave off here at this slide under sales contracts, which is, don't go nowhere yet, guys. This is slide number 15. All right, so we're going to leave off at slide number 15, page number 17, okay? Let me stop the recording.